Hello folks, Brandon Chapman with you today. It's a Theo Night video for Monday, November 15th, 2021. The massively unched finish hides strength in utilities and energy. That's the title for today. I mean, what do you do when the market basically does nothing for a whole day from Friday's close? That's about where we're at, right? Maybe it's a wedgie, who knows, right? What kind of patterns are forming? Doesn't really matter, as what you'll find is that ultimately today was a pretty good day where there was a lot of balance between buyers and sellers. We finished exactly where we started on Friday. And right now, as far as looking at the futures, if we look at the SPY, we could look at any sort of overnight gap, and you'll see we basically opened it about higher on the session, faded throughout the course of the day, then rallied towards the end. So as we look at the cash session, we had a very strong open, or relatively strong open, and just faded. The question is, what do we expect from here on out, right? Where's the market and where is it going in the future? I mean, some of the weakness or lack of strength today did belie some areas of strength in the market on a sector basis. And I'm going to bring up here my S&P 100, but, and we'll kind of look at that here because, as you look at sectors, you'll see utilities up 1.3% today. Energy up 0.83% today. So if you guys recall my video from last Monday, unusual option activity and Duke Energy, DUK, hasn't exactly been a starter. A couple of the stocks I usually focus on this area or this sector, Southern and VST. VST was up very, very strongly, 4%. This was a stock that I looked at on Friday in my session at TheoTrade. It's one we follow quite a bit. But anyway, up 4%. So it's not exactly all perfectly centered on the big areas of utilities, but are also spilling over to energy. But before we get there, let's address this question. Where's the market going for the week? You look at the Qs, for example, basically unched on the session, right? Down slightly by the close or by the end of the cash session. You look at IWM, for example, right? Down 0.4%. The diamonds, DIA, tracking the Dow Jones, basically unched on the session. What does this tell us? Well, it doesn't really tell us a whole lot. When you look at the VIX right now, the VIX is somewhat elevated, but near a support around 16. More importantly, when you look at the skew tells us something very important. The skew right now is at 144. It's above 130, and it's very, very high in its historical range. What this tells us is there's been a fair amount of hedging that's gone on already. High skew tells you're going to have a higher frequency of small up days with crash risk. So going forward in the week, what we're going to see in the market is that there's going to be a listlessness to what's going on. We might see some up days. That's the higher probability event to see more small up days here, grind it out, maybe retest 470.50 or so on the SPY. But then we're building the potential for the downside. And we kind of got a couple of days of it there. We may get more, normally maybe 5 to 10%. As you look at the timeliness of a potential correction, I like to look at the ratio of 3-month volatility to 1-month volatility. Now on TOS, you can use this as a pairs ratio study. And so it'll plot two lines. One is the addition of VIX3M and VIX, which is the 3-month and 30-day VIX. And the other, the yellow line here, is a ratio. What you'll see is that right now, VIX3M is 26% higher than the VIX. Well, it points to a very steep term structure that shows the futures prices. Well, this is not futures. It correlates to your front two contracts on the VIX futures. It basically points to the market expecting to see some volatility here. We saw it peak and we dropped a couple of days. Now we're back up again. So with high skew and high back month volatility, remember, you'll see a higher frequency of small up days, but we're building until the point we're expecting to see a bigger pullback on the order of 5 to 10%. Now, this has been an unusual market. It's been an historically bullish market. And so over the last year, we've only gotten maybe moves of 2 to 3% with the exception of what we saw in September. But what we might see right now is that we could see limping in to the end of the year here. Maybe we go a little higher and then we start to break down, but ultimately we may not finish much different than where we are today, but the bias might be just to the downside a little bit here as we're seeing a lot of very high back month volatility, very high skew, leading to the potential here in the coming weeks for a more significant correction. Maybe we get back to those lows at 430, but maybe we rally and finish on. It's very hard to kind of predict where things are going. But what we do know right now, there's not much of a driving force. And I'm not sure that earnings are necessarily going to fix it and continue to drive things higher. Now, that being said, it doesn't mean there is an opportunity. Right, as we talk about XLU catching a bid today, kind of breaking out of this flag type formation. The price of the sector ETF has been testing the 61% retracement, and it looks like today we might be in the position in the coming week here to break out of this. If we break through, maybe a chance of rolling to 70. And we already looked at a couple of names in the utility space that did move. Now, I didn't necessarily see a lot of option activity in the utility space like we saw last week. And it was very unusual to see utilities breaking up today, despite the fact that basically treasury yields, the 10-year treasury yield, was moving higher today. And so that's very unusual to see the two go together. But it really kind of shows to me that ultimately market's looking for some defensive parts of the market, and they're not really expecting this to get a lot higher, even though maybe it can. We may see us up at 1.75%. But one thing that was interesting today, you'll see 0.41. So the 10-year was up basically 0.41, 0.4 points, right? Look at the 30-year. The 30-year was actually up 0.52, and the 5-year was up 0.21. What does this mean? We did see a steepening of the yield curve today, which would generally favor financials, but financials finished, guess what? Unch'd for the session today. So no real momentum. Market's not buying it. When you look at regional banks like US Bank, for example, was actually down on the session. Look at another regional bank ETF, was slightly higher on the session. So there's not a lot of conviction in financials, despite the rise in yields and the steepening of the yield curve today. Just maybe points to the fact we may have limited upside here in yields before it starts to affect the equities market. As you look at the top stocks today, Boeing certainly breaking out today, breaking through a multi-month high. We're looking at CVX, which of course is an energy stock, right? So we'll kind of circle back to that in a minute. But we had Qualcomm, PayPal, some decent activity in SoFi today and Square. We're not going to look at those specifically. We're going to focus on a couple of others. But again, you can kind of see Duke Energy, one of the better performing S&P 100 stocks here, right? So 0.72%. I mean, but the fact is, it is one of the better performing. Exxon, also part of the mix here. So Exxon is one that did experience Nextera up 1.19%. So we got some utilities and we've got energy, those two specifically kind of leading out today. So if we look at, for example, we'll look at Exxon for the moment. So Exxon, the activity here was on the 67 strike for 26 NOV, 17,900 contracts trading as 873 open interest. If you were to look at a chart of this, what you'll see is that it kind of kicked off early in this session right here, for example, then kind of petered out throughout. We saw some stuff come in throughout the course of the day, but over the course of the trading day, it was generally bullish till about 12 o'clock Mountain Time. We're seeing a little bit of after hours selling here, but we kind of popped higher. A lot of volatility after hours, really no volume to speak of. So point being here is what? We're seeing a little bit of a bullish bent to Exxon. Now, does that make sense? Well, if we look at /CL, we're talking about oil, right? Well, last week we saw oil inventories increase by about 1 million barrels. It was actually, a little bit under what was expected. But when you look at crude oil, it's firming up right now around support just below 80, and we kind of rallied and we finished about 81 today. Well, when you take a step further and you start to look at the term structure of oil futures, and what you're noticing here is that's this week. This is going back a couple of weeks here. What you may notice is that the line is falling. What does this mean? It means that the market is in backwardation. It means that the cost of storage and financing and then the ability to lease it out, the net cost to carry is positive, which means that these back contracts are going to rise towards the spot, whereas if it was slope the other way, they would fall towards the spot. In this case, there's a very bullish structure for the oil market. And if you look at the 5-year range, the oil inventories are at the bottom of the 5-year range. We're just scraping along the bottom. There's not really a bear case scenario. It doesn't mean that oil prices are going to go largely higher, but at $82, $85, if oil companies continue to increase production like they've done in recent weeks, kind of restoring that slump following the hurricanes, maybe there's a chance they start to see more profitability. So as you circle back to Exxon today, catching a little bit of a bid, we might look for this thing to test the recent high at around 66.5, but maybe there is more to it as an integrated oil company if energy prices and oil prices specifically remain high. Colder, maybe a cold spell coming, whatever. We could see natural gas prices starting to rise in the near term. They're firming up near a support level. As we look at the periphery, XLE, this is a sector ETF tracking, and obviously Exxon and Chevron are going to be a big representation of XLE. This is out in Feb, so we're stretching it out a little bit, and out here around what? The 72 strike for February. Buying activity out here. So what does that mean? XLE, $72? Is that possible? If we have a colder winter and we start to see oil inventories, they don't really rise in a significant way, we could very well see a shortage and see energy prices spike here. So the risk is very likely to the upside here, and we're seeing some representation in the energy space today that suggests that might be a very real possibility. XOP out in March, for example. Again, look at the strikes out here. We got an upside call spread, 135, 145, I believe. Again, you're looking for upside, significant upside, stretching out in the beginning of next year as we start to reach towards the end of winter in March. So February, March contracts, we're looking for significant upside in these sector ETFs. So something to watch. You also notice KMI on the list here, right? This is an oil pipeline stock, for example. So again, what happens there? You'll see a mixture of consumer staples play. Staples did pretty well. Real estate in the mix as well, which is very surprising given the fact that we are seeing rising treasury yields today. Let's circle around to some stocks that saw some significant interest. When I spent a bit of time last week talking about the interest really popped up on the 11th here when it was down, with significant call activity for the January expiration at the 55 strike up here. And we saw that, saw it for basically 3 consecutive days. So as we come in here, we look at the January expiration on pins, you'll see 24,000 contracts trade against 46,000 open interest. Normally you might look at that as being closing activity, but if you're tracking it on a day-to-day basis, you would have seen that we're building, right? We're adding to this, see the last, we saw 3 sessions, the 10th, 11th, and 12th last week, trading over 10,000 contracts, and again, more today. So we'll probably see that open interest continue to swell. But what this does provide is an indication on pins, and we got the early indicator last week on the 10th and the 11th of upside, maybe to 55 or possibly higher here on pins. So again, very nice little short-term bounce today. Again, probably gave you more of an indication last week from last week's activity. MNST, this is a consumer defensive stock. It's a beverage stock. And as we look at this, what you'll see is that, I'm just going to clear my drawing set. The company had a good earnings result. The stock gapped higher. They made 63 cents, whatever that means. But the point is, as we look at, got my wrong drawing tool on here. As you look at how much movement would you expect, we're sitting about the 50% retracement, and that's just on the initial move. We're kind of breaking out, closing at a new high over the last week or so. We're starting to open up the potential, maybe a chance of getting to 98 or 100. Today, what you saw was on a December expiration in Monster, 4,700 contracts traded, the December 95. Now, it's not all that far out of the money, but 95 is indicating we may have a chance of breaking through this 61% retracement, indicating maybe the potential in the coming weeks and months we retest the highs at around 100. So Monster is looking for a continued move, and we did see the move today on above average volume, kind of breaking out a little bit of a flat pattern the last few days. Another one is PAGS. Now, sometimes when you look at the activity, it's just rolling, but rolling does help reaffirm the outlook for the stock. Now, in this case, PAGS is higher in the session. We gapped up following the earnings. We're seeing today, we gapped slightly on the open. We're rallying here, engulfing yesterday's candle, bullish engulfing near-term expectations, $39, $40. But is this the possible potential reversal of this downtrend we've experienced? You look at the range from $32.50 to basically $40, 7.5 points. Can we get to 47.5? Well, if we look at the measure of the retracement here, 47.5, that gets you around the 50 to 61% retracement in PAGS. Now, as we look today, what we saw in PAGS was a June expiration, but it got rolled from the NOV. So we're closing out the NOV 35s, and they're putting on June expiration options at, let's bring it up here, at the $40 strike price. So we're rolling it out and up. There's a little bit of profit taking going on today, but there were 10,000 contracts closed for November, 15,000 contracts put up for 17 June at the $40 strike. Now, granted, that's right there, but are we indicating we might have the chance of breaking out and then moving to 46.5, maybe $50 in PAGS? So something to consider there. A bearish trade today, APP. And we'll have to wrap up with this one. This company's been on a very, very nice tear, going from 50 up to a high of about 116. The company announced the earnings, got a big pop here. Is this kind of that last gasp on the part of the bulls? Well, we held on Friday, and we're down today 8.5%. When you go to the trade tab, this company does not have weekly options, but it was a November expiration here, buying the 105 and selling the 95. Again, indicating what? Some downside potential activity in APP. And not only that, with it, they bought the 5,105s and sold 3,595s. And you can see that down here under time and sales, fulfilled in one trade this morning around 8 o'clock Mountain Time. But what does this tell you? 95 down here, right? We're looking for a reversal in this trend in AppLovin. Anyway, folks, we'll kind of wrap it up there, but I hope this gives you some ideas for the coming week, maybe some trading ideas, etc. You have a great one. We'll see you back next Monday for the video, for tonight's video. Thank you.